Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these my charts. This was all my own original work because I think you deserve to have that. So with that, LME 3-month copper. The supports on this market are the same that have been since mid-May and possibly if you take out one aberration since late April. They are the green short medium moving average currently at 96.69. Then the mauve medium moving average currently at 95.83, which held up the market the last 2 weeks. The bright red neckline extension currently 95.40 of the November 24 to February 25 reverse head and shoulders bottom, and the gold long moving average currently 94.18. Further to this, at the start of July, prices rose up into the overhead band of congestion between 97.50 to 99.95, an area I've described 5 weeks ago as a gossamer area, even closing in it and over it. But it was just the once, and prices came back down to rest on the previously well highlighted congestion between 93.95 to 96.06, which also contains the 50% Fibonacci line of the October 23 to May 24 move at 94.80. However, we are this week moving back up into that gossamer overhead area of congestion between 97.50 to 99.95. Now, for good order's sake, I'd like to once more recap, as I've mentioned here so many times before, the three congestions which we seem to be working our way up through. The first was between 91.83 to 91.86 and is the weakest of these congestion areas. The second is the already mentioned area between 93.95 to 96.06 and is the one we became clogged down within over April and May, and from which we have moved up and away from. The final one is the one we are now working our way through, and also previously mentioned between 97.50 to 99.95. Overall, we've been chewing our way up through this for quite some time. I added some thought on this 4 weeks ago, and I quote, "It would be the cruelest blow to the bulls out there if the ammunition for this attempt higher should finally run out anytime soon. Just remember the next congestion area overhead between 97.50 to 99.95, end of quote. Well, for now, it looks like the disappointed bulls may be having a second attempt higher, leaving us with some significant supports below the market. LME 3-month aluminium. As I've stated here many times, there are a number of patterns, one within another, all happening at the same time, all affecting the market in their own way. To start with, and is by far the most consistent one, is the bright red, shallowy bullish shift pitchfork for the mid-December 23 to late July 24 move. For a while in March, we saw prices starting to establish themselves over the middle time, which is currently at 26.77. But as I stated 16 weeks ago, and I quote, "It was a tenuous hold over it and prices dropped down through it and have remained below, pushing further down. However, this pattern still works at the lower time, and that's currently at 23.68 in the end of the quote." I added 15 weeks ago to this, and I quote, "This is one to keep on this daily chart as the low of the move has been right on the bright red lower time," end of quote. Now, we've seen the bright red lower time punctured but repaired with no closures below it. And this action worked pretty well at showing the low of the recent move down from late April to date. Now, we have seen a number of attempts at piercing higher since then. In late June, the market pierced on the upside the flatlining gold long moving average, currently at 25.67, reaching up to the congestion at 26.50, and just short of the big old 50% Fibonacci line of the 2008, yeah, that's old it is, 2008 to 2022 move at 26.75. We've since pulled back to sit on the gold long moving average, which is within a small congestion band between 25.63 to 25.81, and started accumulating ammunition. We also have constructed a mid-April to date dark blue bull channel, currently 25.51 to 27.42. The lower trend line looks solid enough, though the upper trend line is still only a 2-pointer right now, but it is far enough above not to be a concern just yet. Thus it seems the flatlining gold long moving average is the one to watch below, also with an eye on the dark blue lower bull channel line, and then the bright red middle sign is the one to watch topside with another eye on the dark blue upper channel line. LME 3-month lead. The key features here, and some of them have been here for a while, had in the past all related to a very large broken descending triangle or a related broken descending wedge pattern. However, a newer mid-April pattern is starting to show itself. But first, the broken descending triangle and broken descending wedge pattern are both made up from the early July 24 to early March 25 purple broken downtrend, currently at 1879, now well and truly broken. And for the descending triangle by a bright red broken early August to late December 2024 head and shoulders neckline, currently at 1957, which had earlier acted as an immediate support zone. Then for the broken descending wedge pattern, well, this is made up from below by a dark blue broken neckline extension, currently at 1879, of the July 23 to February 24 head and shoulders continuation pattern, as well as the earlier mentioned and common to both patterns purple broken downtrend. We've had breaks out of these two patterns, false breaks, both above and below, but in mid-May the market waltzed out more or less sideways for a final attempt on the top side. The key congestions the market had to overcome were all centered between 2001 and 2003, quite a narrow range. This is a small congestion which gained significant attention, as I noted in my earlier video commentaries, and which you have been embracing one way or another since last Friday. We right now have nearby to this congestion the mauve medium moving average, currently at 2028, the green short medium moving average, currently 2001, and the gold long moving average, currently 2000 even. 4 weeks ago, prices took a flyer on the upside, overcoming all these, as well as congestion between 2036 to 2039, including the January 2021 high at 2039, and up to the next congestion at 2060, which was breached, but which eroded the bullishness enough that we formed a horn top over the last 3 to 4 weeks, and turned lower, reaching both the primary and secondary targets for this pattern. However, as I mentioned right at the start, there is a newer mid-April to date pattern which has started showing itself. It's based on the bright green mid-April uptrend, currently at 2012, and was breached on the downside last week. However, it seems to be trying to repair itself right now. This bright green trend line was originally seen by me as part of an ascending triangle between May to June, but it has developed into a mid-April to date, shall we say, bump and run reversal pattern. Now, if this pattern decides to follow through on the downside, then we will have a primary target X down in the 1964 zone, just above the bright red extension to the August to December 2024 head and shoulders neckline, and a secondary, harder to reach target X1 down at 1916, which is coincident with the low of January this year. Okay, so as I said last week, and I quote, the feature on this to watch out for is that a second smaller bump may now happen based on the bright green trend line before a further move lower, so watch out for that. The issue of any move lower is not the second bump, but that we have, as I put it 5 weeks ago, and I quote, also have around here a small congestion area between about 1971 to 2021, dating from early February to very early March, though I'm not sure how good this is. The seeming stabilization over the bright red neckline and the newer stabilization over the 50% Fibonacci line at 1971 suggested further attempts higher. However, the resistance from the various moving averages and the smaller congestion 2001 to 2003 seems to be up to the challenge, and prices have been somewhat bracketed, end of quote. Last week you saw a drop down to the 50% Fibonacci line at 1971 before a pullback up. However, the pullback up has seemingly stalled at the bright green trend line, and it'd be interesting to see which overcomes which, whether it is the bright green trend line capping the market, or whether the congestions at 1971 to 2021 support the market enough. However, The pullback up has seemingly stalled at the bright green trend line. Now it'll be interesting to see which overcomes which. Whether it is this bright green trend line capping the market, or whether the congestions at 1971 to 2021 support the market enough to cause prices to rise higher still. Finally, there is one other point I would like to make, and it's a point I have been making here since the start of this year, and I will continue to do so going forward. It has been and still is to me the most important point of all. So, at the end of December last year, we saw that 2024 had created here a very large and rare pattern, an annual key reversal down in LME 3-month lead. Hence, one should look at all things going forward this year in this metal in the shadow of this longer term bearish pattern.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.